folks. Welcome to Episode 2 of CRT and CRT Soup Mastery YouTube series, The Journey. So this is going to change your perspective completely on the market. So if you want to build a sustainable, long-term profitable model and reach a pro levels, this is the right place. So our topic for today is key level. Also, I'll be talking about the type of reaction at key level in general and the opportunities before and after we reach a key level. I will also be talking about the market profile. So each episode will have a continuation of the previous ones. So that after finishing the YouTube series, you guys have a complete system. So if you haven't watched the first episode, please pause the video, go watch it, and come back. Also, if you are not subscribed on YouTube or follow me on Twitter, Telegram, please do it only if you don't want to miss anything in the future. So we start by asking an important question: why we use key levels? So in smart money language, we said that smart money, the market makers or the market owners, use key levels to sponsor their moves from point A to point B. It's called smart money sponsorship, right? And this is where institutional swing points are formed, right? Which is the important highs and lows, or the higher time frame turning point, right? So we start by focusing on the higher time frame first. 3-month chart, the monthly, the weekly chart. But since the price is fractal, it also can be used on the lower time frame, like daily, 4-hour, even lower. But if your higher time frame suck, then probably your lower time frame is even worse. And this is why you are here, right? To learn how to trade with the brain. So marking the key level is a skill by itself, same as trading the key level. It required proper knowledge on market profiles and also the phases of price, and of course the aspect of time. So proper trade idea starts by properly marking the key level, right? Keeping in mind that you already know what you're looking for in terms of reaction, right? So only after price reaches your key level, now you're looking for a trade opportunities, and this is our main topic: understanding how price will act inside the key level on the lower time frame. Okay, so after marking your key level on the time frame on trade, now you wait for your key level to be reached, and usually have two high probability reaction, which is the W shape or the M shape, and you have the V shape, right? So we have the key level here, and we have the candle number 1, candle number 2, which is the manipulation candle. If you can see here, we have a candle number 1 acting as a range, right? So we have the engineered liquidity just below the key level. So we engineered liquidity, then we open high on the next candle, we tap the key level, and then we expand, right? And then we have the usually the reaction, which is the broke of the low that took the high, right? So we have the broke, the expansion, break the low, then we engineer liquidity, take it soup expansion, right? So which is the OTE, right? The second reaction is the difference is the candle number 1 top the key level, right? So we said we have an OB and key level, and we have the candle number 1. So we engineer liquidity inside the key level. So this is the difference. Here we stop just below the key level. Here we are inside the key level, right? Then we have the candle number 2 with an open high taking this liquidity, right? And which is those highs are acting as a range, right? So we need to wait for the range to form, right? Then we can trade the range, and this you're going to see inside the key level an expansion that caused of a break of the low. Okay, now then we have the third reaction, which is usually on the swing highs or lows. We have the tapping an expansion into the key level. So we have speed into the key level and speed out into the key level, which is the V shape, right? Next we have the opening of the next candle, right? So we have an open high, manipulation, expansion, and we have the OTE here, then the expansion. And inside the key level usually the best reaction, which is the pump or a dump, which is gonna do two things. We either gonna break a low that took the high if we're bearish, or we're gonna form a model one here or here, right? So either break a high or low, or we form a model one. Then we have the the OTE and the second expansion, right? So we jump now to the probably the most important explanation of the series. This is the continuation of market profiles. So this is the basic, like you need to understand the market profile. Deep understanding of market profiles is gonna lead to a proper. You're gonna lead you to properly mark your key level. Okay, so after you mark your key level, right, you need to know that there is two journey: the journey into the key level and the journey after we hit the key level. So this is a phase price. It could be retracement, expansion, or it could be a reversal here, true reversal. So the way into the key level is the same as we hit, is the same. We use the same technique, I mean, right? So we use the market profile, so we are profiling the markets until we hit the key level. So we're using the key level as target, right? When going into the key level, when trading into the key level. So we are using market profiles, right? So first of all, we have reversal, the same thing, expansion, trader soup, expansion, key level, anything. And the most important thing is there are fractals. There are fractal of this move. What does that mean? There are fractal moves basically. So if you pay attention, trading into the key level, right? You see this here. So we are using a liquidity pool. So we have the low, we have the key level, right? We have the target here, and probably lower. So we can trade this expansion into the key level on the lower time frame, right? So this expansion into the key level is gonna look like this. So we have this is your key level. There is probably a key level here, and this is a broke of the high and start profiling. After we hit the key level, there is also, we can profile the markets here from here, which is basically is gonna look like this. It's gonna be a broke of the high and then a lower time frame liquidity engineer like this, and then we broke until we reach the targets, right? So this is a fractal profiling inside a retracement or expansion. So it showed, since price is fractal, the same thing is happening, right? Also here, above the high into the low, there is a, from the low to the high, there is a expansion. We can use the market profile, right? Rejecting highs, broken lows, until we reach the liquidity pool or the key level, Then after reverse, we have a target. So there is also the same thing here, basically. Right. Now let's go more deep, right? Let's go a little bit deep. So if you can see here, so we already reversed. We hit the key level. We have the reaction, one tap, liquidity engineered, then manipulated, expansion, right? First expansion, the OTE. Then a high probability key level is formed here, which is the high that broke the low. Okay, so if you pay attention, after hit the key level and we reverse and we do the first expansion, the market is gonna do what? It's gonna start creating lows and then expand. So this is the first expansion, right? On the high time frame, from here to here is the trade idea, right? So we expect a swing to be formed here, which is a turning point. We can take it from here to here, right? So once the market reverse, it's gonna create this, and probably it's gonna create another one, right? So we either have this or the market come back here. So let's say that the market is bullish. So we create a low. Then we also have another trade idea from here to here. This is what I call fake lows. So when the market reverse, we're gonna create fake lows. Why? Why I call them fake? For a purpose, right? So you need to be scared because those are long. You don't treat these lows after reverse as a protected lows until we have the manipulation, right? So we are buying below lows when bullish. So we're not trusting these lows to hold. But this is the most advanced level. There are also a trade idea from this low to this high on the higher time frame, probably. Also the lower time frame. So this low is protected until this high is taken, or we have SMT. So this low is protected until this high. Because why? The market reversed, we are looking for a dump. So if we failed to dump below this low here, right? If we fail to do it like this, which means we're probably gonna use this low. And if you know that we are going to manipulate a low, there is an idea of trade, which is the counter trend. There is a counter trend trade idea here from this high to this low, right? Then we either reject from this low, continue the move, or go even deep into the key level and continue the move. So this is what we are going to trade. We either trade this or we trade the dump below this low, right? So this is the highest probability. So this is how the market reverses. So it could look like this, or it can look like this. So we are going to trade, especially on the high time frame, this low, expecting this is the target. So there is a market profiles, and from this low into this high, from this low into this high, from this low into this high, is gonna look like this. So we have a fractal market profile, right? So if this is a weekly swing low, it's gonna form here, and we're targeting the high, right? There is also probably a 4-hour market profile. So if you go to lower time frame from here to here, right, from this price level, you're probably gonna find something like this. Something like this. You're gonna find reversal, and this is the low here. This is the low. It's gonna form, broke the high, and probably is gonna do the same thing. Fake low, soup expansion, right? Same thing here, right? So this is the thing. So if the market reverse, we always expect fake lows to start creating. So the market is gonna create fake lows. And I can say whatever, right? I can say whatever. Fake lows, low that took the high. This is my style of teaching. This is the what I found people understand most. So this is the easiest way so you can understand the market. Okay. So let's say the market is bullish. Weekly is bullish. We dump below a low, right? Then the market's on the daily, probably on the 4 is gonna start creating a fake lows on the daily, right? So I'm gonna start drawing from this low. So the market is gonna do the reaction soup here, expansion, broke the high, right? Then the fake low start creating. So we either have 1, 2, and a dump expansion. We either have 1, the second is the soup. We either have 1, 2 reversal, or a deep retracement expansion, right? So this is the all what happens. The idea is you expect a dump below low. This is the continuation trade, right? Talking about the counter trade, which is this move here, or this move here, or this move here, is gonna look like this, right? So we do the same thing. Once we do a counter trend, we're gonna break a high, right? We're gonna start creating fake lows, then expansion, or make a high, second high, took it, expansion, and this high is probably protected, right? This is the thing. So there is always a fractal moves inside a fractal moves, which is fractal expansion phase after the manipulation. You can call it whatever. Just you need to understand this. This is really important if you wanna master these markets, because there is a trade idea here into here, right? There is a trade idea from here into here. There is a trade idea here from here into here. There is a counter trend idea, because if the market is, we have a manipulation, a counter trend is always expected. So we do the same thing, profiling the market into the key level, and the highs and lows are probably key levels also, liquidity pools, but also a key levels. For me, you can trade them at key levels, right? So you can trade the high into the low, and this is your counter trend idea. And this is the what happens on EU and GU last couple of weeks, right? So the same thing is happening on across all the asset classes, right? Also, this is important on the high time frame if you wanna catch a these highs and lows, right? So especially on the higher time frame, if this 3-month low is gonna form here, there's always an idea here. So it's not just us profiling the markets, right? So this is the key. Also, I just forget. This is can be applied on the all time frame basically. So the higher time frame, if you are trading a yearly candle, you're probably gonna use the weekly, monthly, usually weekly, and profile the market this way. So if we reverse, if you expect the yearly low is gonna form here, so every low is going to form. There is an idea, a trade idea into the high, and you can fractalize this range here and trade it on the low time frame using the methods of the market profiles. You either use the high time frame candles or use this method. For me, I use both, right? So as a professional trader, if you want to be a professional trader, you need to use the both methods, since they are both high probability, right? So this is the idea. So if you don't understand this, that there is a move until here, from here until here, and here on the higher time frame, like you literally can't you don't have like a poor understanding of phase of price, how price moves, and you're gonna struggle on the, especially on the higher time frame, or on, and especially on the defining your draw liquidity, right? So this is your goal for the long term. If this is a institutional swing point is gonna form here. Alright guys, so this is the first example, and it's going to be actually about the key level, and then the journey from the key level until the target. Okay, so we're gonna talk about the opportunities, right, and lower time frames, key levels also, and like the overall idea of what I explained just before. So if you can see here, we have the yearly chart. So we have the the rally. I'm going to explain what happens here, but we focus on this price action here in the last couple of months. Okay. So basically we can start off the CSD, right? So once we close above these monthly down close candle, three monthly down close candles, we have like a clear change in state of delivery. So the OB is formed here. So this is the higher time frame key level. Okay. So if you go to weekly, right? So if you pay attention here, the weekly just rally. So this is the low of the year actually. If you pay attention, this is the first time that we drop below a weekly low, right? So once we drop below weekly low in the yearly expansion, it's simply the idea of the target is easy, right? So the target is actually at the high, right? Since you are bullish, so any dump below low, we should expect an expansion into the high, right? So the basic idea from the monthly key level, we created a weekly key level. Also I can explain this price action from here to here. Anyways, so we are going to focus after the manipulation, so the first manipulation of the year on the weekly chart. Basically, there is a lower time frame manipulations here, but on the weekly chart, this is the first. So we're gonna blend a liquidity pool above the key level with the key level, right? So this is our main reason. So we have a low, and we have the key level. Now, if we go into the daily, right? So we can see the liquidity pool. You can see another liquidity pool on the daily, just above the key level, and just above the low, right? The important low. If we look at the lower time frame, I usually use the 4-hour. On the lower time frame, we see the reaction that we talk about on the beginning of the video, right? So if you pay attention, we have engineered liquidity just above the key level, then we take it. So this is a really good opportunity to go long, right? So this is the key level trade, right? This is the lower time frame pattern that you're looking for, that's going to look for. So engineering liquidity taken on the 4-hour. This is basically it. Simple as that. Or the V shape that we talk about, right? The V shape. Anyways, so if we go to daily, right? The first idea of this reaction, the first idea is this is the low. This is actually a swing point is gonna form here, is the model one, right? Then we have the next weekly open. So if you go to weekly here, you see that we manipulate the low, but the weekly open here. So if you are a pattern trader, you expect a OB to hold, and you expect like lower prices. But now you have brain, guys. So now we have like a good understanding of price. Okay, so we have the weekly open, and this actually is gonna take us on the what actually happens just before on the profile, just what I explained before, right? So if we have a higher time frame liquidity pool, and we have the reaction, the expansion, we actually gonna start creating lows, right? Lows, for example, it happens here, and so on. So this is the idea. So our idea is the dump. This is the highest probability trade. If you are looking at the actually the high, the monthly high, weekly high, anyway, right? So how we can trade this actually? So we are treating these lows into the high as a weekly. Those are weekly, actually are weekly candles, right? So anyways, after we create a low model one, we always expect a low to be formed, right? The first signature of low, CRT, right? Daily CRT, then trading the chart for day, right? As an expansion. Then the weekly is gonna open. Then we look for the same. The profiles, the first episode, right? Same thing. But our idea for long term is this, right? So our trade opportunities, how we can trade this? We actually can trade the low into the high. We can trade this low into the high, right? Then we actually can trade the counter trend. If the weekly opens, let's say here, start dropping, we have an idea, right? Targets. This is the this it's not actually, but sometimes it's really good. It's really high probability, right? So we can just wait for maybe next month and start profiling. No, like we have like a clear idea, and we need to. Doesn't matter if the next month opens. We have like the system, right? So we are following our rules. Those are rules. So we trade low to high, low to high. So those actually a trade opportunity. The highest opportunity is this. Once we go below the low, right? And this is what happens actually here. So we created the first low, expand, created second low, expand. If this is a counter trend, where the market is gonna reverse from? Is that gonna reverse from this low here? No. It's more likely to go into the liquidity. These are liquidity points. Those are ranges, right? So the first idea is if this is a counter trend and we are trading the counter trend, obviously the first idea is this and this into the high, then the retracement, then the OTE, then the drop. So we are trading this until here. So this high, this low is protected until the high. This low is protected until the high or SMT. And then we have the manipulation. First manipulation, first daily manipulation. So this low is actually protected until the high, because if you pay attention about the reaction from the key level, if we have key level on the daily, so the best reaction is to look for engineered liquidity, take an expansion. So this is our this is what we are looking for, right? This is the W shape, right? So if you pay attention here, we didn't have it. We just have a single low. And this is what caused the second manipulation, right? Let's pay attention on what happens on GU, right? So GU created the model one, expansion, we obviously have SMT here, right? Then GU created the liquidity pool, the first liquidity pool. This is the important high, and this is the counter trend. It could be traded, but until here, right? So this low is protected until maybe the key level or the high. In future lessons, we will talk about the levels that we expect an OTE to happen, which is the contraction is when the contraction is gonna start and when it's gonna finish, right? So those questions will be answered on the future lessons. Okay. This is our basic. We are exploring the market, right? So we have the high time frame drawn liquidity, and we have the first manipulation. We have the key level, liquidity pool, and we have the reaction from the liquidity pool, which is liquidity engineered, and then taken, right? Then you see the expansion. Okay, so this is the low. So we can say that this low is protected until the high or SMT, right? So 22 August, it should be protected until the high. And this is what happens on EU. So once EU took this low, 22, right? We have SMT because EU reaches the low, right? So you should take a partial here. Or if you are on GU, you should take partial the time that EU hit the doll, right? Because this low, we don't have like a proper reaction from, no? And also it's like a lack of a key level, right? So first key level is the high that broke the low, right? The FVG that we didn't use on the discounts, right? And also we have the opening price of the new month, anticipation of all these aspects. Anyways, if you go to EU, we see that EU take the low, which is we have the liquidity pool that broke the high, and we have the W shape that we're looking for, right? So first step, second step. So this should be a low. This low should take it at least this high. Sorry, this low should take us at least into this high, but we are expecting a breakout until this high. Same here. We are trading this, taking partial, expecting this is the long-term doll, right? So expecting a breakout. If we have retracement, manipulation, whatever, we already took partial. We are safe, right? If we manipulate again, we enter, we target the high. First of all, SMT also here. If you pay attention, EU took the high. So if you are trading GU, so the SMT happens here. If you're trading GU, if you're trading this low, the SMT low, you should take partial here. And this is what actually happened on GU. So GU take doll, but EU actually didn't take the high. Oh, sorry. What is happening? No, both take the doll. So when SMT happens, right? This is our drawn liquidity on EU. This is on GU, right? This is on EU and the other one is on GU. So this low is protected until the high. Partial, look for the high prices. Then what actually happened, if you pay attention at the market profiles, the opening of the new month, because if you're trading 3 candle model, we expect if the new month opens here, we already expect a weekly manipulation, which is obviously a just daily low, right? So weekly open, daily low is obviously, or a weekly swing, whatever, but we expect a liquidity to be taken, right? So this low, if we didn't have a proper reaction, we should from liquidity pool to key level, it can be taken, and this is what happens here. So below this low, we just tap it once, right? And that's why we come back here and we made the reaction here. Right? So this is the open low. This is the first week manipulation. Then if you pay attention on the lower time frame, it's just the same thing what actually happens here. So this is the pattern that we're looking for to trade the weekly swing or the daily swing, right? So this is failed because we don't have a W shape below the low, right? But we have SMT here. It delivered. We can trade it actually if you have a good confirmation lower time frame. But actually, once the monthly opens low, and this is what looking for. So liquidity engineered and taken inside the key level, which is the daily FVG, right? So daily FVG here, and we have the reaction, right? One tap, second tap, expansion, and if you go to daily, so this low should take us at least into this high, right? And we partial here and expecting this high, right? And this is if you go into the higher time frame, actually also we have SMT here. So we have SMT here below this low. Sorry, I mean on EU. So this is the SMT happens here because here we have a proper reaction from this low, right? So anyways, so this is the opportunity. So low took high, high, and then this is the highest probability is gonna trade of the month is gonna come here if you miss the low, right? And here you choose your style of trading. If you are trading weekly candles, counter trend, and also catching the high quality trades, right? Then you have a complete system right now, right? For entering, taking partials, and if you can see here, EU hit the doll. So if you're applying the same concept, dump below a weekly low, expecting the high, right? Right. So if we are bullish, right? This is a weekly low. Then if you are going to this high, then the SMT tells you when you should stop, right? So SMT is your friend when trading Jersey, because and this is SMT is gonna be a full series on how to use SMTs. It's gonna be a drop in the future to be a detailed chapter about this topic. Anyways, so here we can see that EU hit the doll, right? GU actually stops here, right? So we have key level here, and we came at the doll, which is at the drop, right? Drop here. So now we are above a higher time frame liquidity pool with SMT inside the key level. So this hard probability SMTs will be discussed later on the topics. Okay, so if you go to GU, now the doll is hit, and we are inside a key level, which is the weekly RB, right? So if you pay attention, if we are using the reaction, so we have a higher time frame key level. Now what we are looking for is just a liquidity to be engineered, right? Then taken. So we have a FOMC here, I believe news, and then we have the broke of the low, and then we start a new phase of price, which is after we hit the key level with SMT, and we just going to do the same, right? So it's just same thing is gonna happen here. So we have the reaction, right? They have a drop, then they have the lower time frame OTE, then we're gonna start profiling. So since price is fractal, we're gonna do just the same things, which is after the model one, we actually can trade the high or the trade week, can trade those lows, but after the model one on EUGU, okay, liquidity pool taken, the model one, then the weekly open. If you are bearish now and we are expecting a new phase of price, right? We actually, the same thing is gonna happen here. So we have model 1, and we once we reverse, we expect swing to be formed, expansion. So there is an idea from the high to the low, and we actually, if you are reversing, right, we actually target the low. So this is the actual doll, right? So model 1 broke the low, and then the important low, right? Since we are reversing, right? And we expect highs to be formed, expansion, and we start trading the highs from to the low. OTE, new highs is formed, and we trade the high into the low, right? Until the higher time frame liquidity pool and the key level is reached, right? Speaking about this move here, as I told you before, the low and the second low, right, can be traded, right, high to the low. But the highest probability is once a weekly, new week or a new month opens. So you have a monthly here, new month opens here. I'm always pay attention into daily highs, right? So let's say that we opens here and start going higher. There is a high chance that the market is gonna go high into this high, because this is the first high, right? So this is where your idea is gonna came from, right? But if you're starting rejecting, how you can know that the market's not gonna reach this high? There is no way, because if this is the first high and we have the weekly opens here, there is no way you can know that you can't know that this is a protected high, right? Because we already take partials. So if you are saying that this high is protected, like, you know nothing about price phases of price. You don't know, only if you use a lower time frame confirmation, right? Because the market is more likely to go higher, take the high, then reverse. But if we failed, which means we created the second low, we can't expect the market to go forever like this. No, it's less likely. So we have the first high. Let me delete this. Right? We have the first high, second high, expansion, and we top the weekly key level right here. So this is a new idea, right? So wherever we're gonna reverse here, if we reverse from here, we're gonna do the model 1, then we start creating the highs, dropping until the doll. Or if we are bearish, right, we need to we don't know, right? Sometimes the market is just gonna take these highs and then reverse. So if the first trading idea is we are bullish until the highs, or as I explained before, we can use the key level as a target, which is the weekly RB, right? So we are bullish until the key level, and this has like you can see it in two times. So if in two ways. So if we are bullish, which means model 1 highs expansion, or so this is the first high expansion, or expansion lower, or we start reject the high and we start continue the move. These two ideas both of them will take us above the high. If you're bullish, you need to look for this high now, right? Especially after the model 1, right? And hitting the key level. And if you pay attention on the rejection block, the weekly rejection block is the lower time frame. What happens on the lower time frame? Let me delete all of this. Is we have a liquidity pool, right? And if you go to the 4-hour, we have the liquidity engineered and then taken inside the key level. So this is the idea, right? So this is the start of an idea. If you are bullish, right? And we can expect the lower time frame to act the same as the higher time frame. If you're bullish, guys, dump expansion into the high. If you're bearish and you see the market creating highs even after the weekly open, monthly open, the only way that these highs is going to be a protected highs once we reach a higher time frame key level, and we have the idea of we can't reject the highs forever, right? So we have an idea of going above a daily, at least daily high. The only way that can stop this idea is actually engineering liquidity and take it, right, on the daily. So if this highs is going to be protected, which is less likely, but if, right, the only thing that is going to leave these highs is we engineer liquidity, right, and then take it to continue the move. So this is something to think about. This is the Euro USD 3-month chart, and we take a liquidity pool, right? Higher time frame liquidity pool. So now we are expanding away, right? So if you are bullish, right, we always expect the fake lows, right? So since we are bullish, we expect a higher time frame low to be created on 3-month charts, then expansion, then probably the soup or another high into another expansion, right? And this is basically what happens here. So this low is protected until the high, right? Or SMT, and this was SMT is gonna take place. So this low is protected until the high. Then after the high is taken, then comes the OTE, right? Which have SMT here. Then the expansion, which is the real move, right? So blending everything. So if we go to monthly, right, we see fractal lows. So this is it's like a 3-month, right? So if you can pay attention here after the true reversal, so we see that the market is creating lows until the high. So this is the first idea, right? Then the second idea is we either came back here or we either create a low into the high. Then I usually create two lows, then come back just to induce buyers, right? Then the OTE is expected. So we can trade the first one into here, then we can trade this high until expecting bearish. But if you get a confirmation here, like a model 1 or something, we can stop, right? Then switch bias into bullish. So this is the idea. So the markets, as you can see, take the low, the imported low, took the high. So this and this are important. So after we took the low, our idea is at the high, right? And this is when SMT take place. Then we have the deep retracement on the 3-month charts into expansion. And if you pay attention, we leave a higher time frame key level, which is the FVG with the model one, right? We expect some more here. Smart money reversal, and this is all our institutional swing points, right? So now you can you know how to shape them. So now we are bullish. This is the idea on bullish here. So we do the opening price. Now we are bullish. What I'm about to explain is this trade here. So once we close above the opening price on these three dark close candles, which is the daily OB or daily exchange safe delivery, we can expect a continuation on the next candle, on the next month, basically. So if you do the opening price and go to weekly, here we expand, here we close above. Then here we have two ideas. We have two journeys. The journey into the key level, the key level here, and the journey after we hit the key level. Now you guys know exactly how to trade them, right? So let's see. If you go to a daily chart, right, here you have like a range, good daily charts. So the idea of bearishness into the key level will start with the model one. It obviously can't sell here. We can talk about this later, right? But it starts from the model one. So starting from the model one to the highs and the fake highs, and which was taken here, right? Then the expansion to key level. So you have two ideas. Model one, you have this week, and as I explained before, those highs start from the opening weeks. So once the week open Monday, we can start hunting to catch the those highs, right? And then we have the week here open, and this is the highest probability idea take us into the actual key level, right? This is the journey into the key level. Now, following the trend, the doll, right? So once we tap, we expect a new phase of price into this high, right? So if you pay attention here, delete all this. Let me delete the garbage. Right. So we have a weekly open into the key level, and we have the reaction inside the key level. Now we are inside the key level, right? So what we are looking for is basically just the same liquidity, right? And then taken, then the expansion into the model one or break of the high. These two things, we either create a model one or it will be like a high here, it will be broken, right? So those tells you that this low is maybe the low of the low of the week. Oh, sorry, the low of the week basically, and more important, the low of its institutional swing points gonna form here, right? Now there's an idea is the next candle open. It just opens here. So you may be really scared about this low to be protected, until his new week open. Just this is not the right time to buy, right? The best time is to wait for the actual OTE, right? Which is this move here. So if you pay attention, the W shape, right, on the higher time frame is gonna look, it's just 2 candles. So since the candle open here, then the daily is gonna look like this, and the daily open, right? So the lower time frame is gonna look like this, right? A V shape, then the stoop, right? This is what happens. So you pay attention. We have the move, which is also happens just before the next week open. So this is the higher time frame. This is the lower time frame. This is how the lower time frame looks inside a higher time frame kilovolt, right? Now the idea on the daily starts with the model one always. So the model one is here. Here we have a new week open. So the idea is gonna start when we close above the model one. This is the highest probability ideas to target, obviously, the high. Then if you pay attention, we have also a kilovolt, a monthly kilovolt here. And we have the 3 candle model. We have a swing, right? So this is probably a start of a institutional swing point, right? Obviously to this high partial and even higher. So if you watch the episode number 1, you always focus on the week number 4, right? So the week number 4 opens here, and we start the profile. So once the model 1 is confirmed, now, as always, we expect the swings to start forming. So we have a swing here before the high. So this is the low that took the high. This is an idea here, right? On the lower time frame, obviously. So weekly open here, opens low. This is a counter trend. We have a counter trend idea until the high, or until the key level, right? Model 1, high. So, right? So we either buy into the high or sell into the here if we have confirmation here, right? So we maybe have the swing, maybe sell these 2 days until the low. Maybe you can do whatever. Maybe you can confirm on the 4-hour time frame here. Maybe see a maybe an M shape above this high here, right? Wherever. Then you can take an OTE or something into the low. So those are, so we have a key level, we have liquidity pool. So it's more likely to use the model 1, right? And the idea started here, and this is the highest probability trade that you want to take if you wanna look for a high, like the best moves on the market, right? So we have the soup here and the target. So until here we took partial, expecting that this low is protected and it's gonna take us into the high, right? So we always expect a continuation. We don't expect like the markets to come back another time, unless we the key level is low, is way below. So maybe we have multiple tops, like we saw in EU, right? And maybe the key level is here. Maybe a start of a monthly open, right? So if we expect a start of monthly open, maybe expected a dump on one of the pairs. So this is the idea of the high time frame idea until the high. Okay. And if you go to the 4-hour, basically, I just forgot to mention this law, right? And this law was created before closing above the model 1, right? So this is the first law. Second law, always the second law is a high probability is really important for trade, right? Even for counter trend. So let's go a little bit deep on what happens on the previous moves. So if you pay attention, like after the manipulation, so we have the manipulation here, and if you go to GU, we see that this is the low that manipulated this low. So we have like a type of SMT here, right? So we can trade the same move on GU basically from the low to the high. Then if you pay attention at GU, like even with SMT, like we can't expect the lows to hold like for the whole move, because once doll is met on one pair, right, new phase of price is gonna come. So after doll is met, new phase of price. So we either is gonna chase. So we either have an OTE to the maybe to this daily range 15% manipulating these highs and then expansion, or we have an actual reversal targeting the low. So this is the basic. But if you are still bullish, then we need a new NG liquidity and taken. So once we take those highs, we start watching these lows. So this is really important. So the only way that these lows is gonna become protected is actually by engineering liquidity and take it, right? Then we can still target the high and higher prices. So this is the only way. And it's exactly what happens. So we opens low, we engineer liquidity, and we have SMT here, basically. And of course, if we reverse, so we have 1, 2, so we can't reject, and we obviously can trade this from low to high, but the important lows are this and this, right? The key level is actually here, because this is the high that broke the low. We didn't even use it, right? So we didn't have an actual OTE. If you draw the low to high, so this is the only way. This is the only time when we purchase into a discount. So this is the basic. So if we are bullish, then we need a engineer liquidity, right? If this loss is protected, and we expect this OP to hold, right? Which exactly what happens. So we have an OTE tap, and we have the SMT. We only can trade, like we can't expect this to hold. Like there is no way, because of the lows and the manipulation is here. We engineered a lot of liquidity. So the only way that those laws are protected is by engineering liquidity and take it, or SMTs, since the SMT is manipulation, right? And this is exactly what happens. So we have an old law, engineering liquidity, and we have the SMT, right? So this is basic logic. So you can, if you are talking about, you can expect this to hold, right? But the idea is you can anticipate this low, but the thing is you need to close above the high, which is the modern one, to start a new idea, to make sure that this high is gonna get taken. But once the SMT happens and we retrace into this high, then you can expect this low to hold, right, with SMT. Then you can trade it. This is a very, 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 very high probability SMT. Very high probability SMT. As I told you guys, the important highs, lows, this start by the opening price of the next candle, and in this example is the weekly candle, which is Monday. So the idea starts at the Monday open low, right? Then you can take it into the high, right? Then we can continue the move, or we can reverse. So the idea started here. And something to add is the counter trend here, trade, right? Counter trend here is a very, very high probability, since we right. So this is also a trade that this is a really high probability trade that needs to be mentioned. And of course the weekly FVG here, right? With the next week all below. If you made it this far, then you're probably hungry for more. But unfortunately, this is going to be the end of the episode. So I hope you guys found it helpful and insightful. Thank you guys for listening, and until the next time, you guys stay safe.